Today on the CEO Barbecue, we're looking for gold in Canada's Northwestern Territory, together with Gold Terra. For a bullet point summary of this and all other CEO interviews, please go to resourcetalks.com and subscribe to our free weekly newsletter. The company you're about to hear from has paid us for the production of this interview, but this interview is still intended only for experienced speculators because this is venture capital and mining is a very risky industry where failure is the norm. All conversations are general and impersonal in nature, and they contain forward-looking statements. I'm not a licensed financial advisor, and my business sells content-producing services, which also makes me biased. So before continuing on, please talk to an independent investment advisor with a good long-term track record because your capital is at risk, and also visit setterplus.ca where you'll find the company's official filings. If you're not 100% sure you understand all the biases and the disclaimers that I just showed you, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said herein. That all said, this is not Gold Terra's first time on the CEO Barbecue, and if you've missed the previous conversations, I'll link them in the description below. They're important as they touch upon a lot of the basics, including incentives, skin in the game, and a lot of other important questions. So do go and watch those first if you haven't. And just in the sake of time here, maybe just a brief company overview. Gold Terra's core thesis is the district-scale exploration target along the Campbell Shear up in the Yellowknife greenstone belt. Their flagship project is the historic Con Mine, on which they have an option. Although over 3 years old now, the initial MRE on the property showed 109,000 ounces of indicated and 432,000 ounces of inferred gold. So that's about 500,000, well, just a little over 500,000 ounces combined. Adjacent to the Con Mine, Gold Terra also owns the Yellowknife City Gold Project, which hosts an inferred resource reported at 1.2 million ounces. Over the last year, Gold Terra's strategy has increasingly emphasized expanding and upgrading those resources with drilling at the Con Mine at depth, as well as at other targets that are near surface and south of the Con Mine, which of course we'll talk about later on. Just recently, Gold Terra closed a $7 million financing, which I'm hoping I'll get to hear more about today, but the proceeds are mostly going to be used for the drill program that's scheduled to begin in January, with the goal being a new mineral resource in 2026. So it seems like a lot is going to change for the company potentially next year. How much work will all that take? When are the assays coming? When will the resource get updated? Those are only a few of the questions that I have on my list for later on today. Gold Terra is listed as YGT. So that's again YG&T on the TSXV in Canada, where the average 3-month volume is about 650,000 shares. The stock's 52-week high is 23 cents and its 52-week low is 5 cents. With a market cap of just under 87 million Canadian dollars and just under 470 million shares outstanding, today this is a 19-cent stock with a 50 and a 200-day moving averages at respectively 14 and 8 cents, which means the stock is now trading above both of them, indicating positive momentum. And this is where it normally provides some more details about the company's share structure, ownership, as well as financials, its P&L, and so on. But for Gold Terra, again, they just closed the financing, so that might not make too much sense for me to do. But I will be asking about money later on and how they plan on spending it, of course. You should still pay attention to those numbers, though, and you should still go and look at them. So go to setterplus.ca and look for the up-to-date numbers yourself. And of course, stick around for that latter part of the conversation where we will talk about money. Now, for this to actually become a conversation, I'm going to have to shut up already. And Gerald, I'll give you the word here. But first of all, thank you for sitting down with me today.
Thank you very much, Antonio. It's always a pleasure to listen to the introduction. I had forgot about some of those stats. But yes, my name is Gerald Paneton. I'm the chairman and CEO of Gold Terra. I've been involved in the project for now 6 years, and to some good time and bad time. And finally, maybe people are realizing the value. I mean, we were just talking about 500,000 ounces on the Con Mine. 500,000 ounces times $4,300 an ounce is a lot more than $2 billion US.
Hmm.
So how come we're just $87 million market cap?
You tell me, how come? Why? What's happening?
Well, look, 4 months ago, Antonio, we were at 5 cents.
Hmm.
Look, I think in every public company there is momentum. Sometimes a momentum is lost, and I think the market was very down on juniors in general. In general, I've always believed myself that if I was getting involved in Yellowknife, there was a good reason. It's because I like the project, I like the valuation, I like also the possibility of creating value. And I think sometimes it's very difficult to gouge a market
Hmm.
like it was from the good project and the bad project because we were all bad, pretty much, right?
Mhm.
For 2, 3 years. I mean, it started I think, in the spring of 2021. We waited 4 years for kind of like a renew anticipation. Is it because the gold price went up more than 30% in the last 4 months, from a low of 3,000 all the way to $4,300 an ounce in less than a few months?
Hmm.
I don't know. I mean, it's always very interesting to look at the market itself because the market price you, right? The interest, the level, whatever you want to talk. And do I feel better that we're not at 5 cents anymore? Of course. Do I think that we reach our max? Not at all. Just look at the valuation. Think about it. If I'm in production 4 or 5 years from now, and gold is $4,000 an ounce, still, and we're making $1,000 an ounce a year. Of course, there's a lot of risk until then. You cannot just gouge of the value. I mean, it's all about delivering, de-risking a project. That's my job. I've done it many times. So when you go to a tough market, there's no fun about it. But I think there's a bit of light at the end of the tunnel. I mean, gold price has been, staying in a very good, nice environment. And our project is in town. Our cost of drilling is low. The acquisition of the coal mine will be a huge catalyst in the future of Gold Terra.
That increasing stock price that you've witnessed here over the last year to where you've gotten to almost again 100 million market cap, which was way different when we first started talking. Is that all market beta, or is that something you've done in the meantime? What has changed about the company to change the market's perception so drastically?
Look at the people involved in the company. I think it's close to 40% of my shareholder base is in very, very good hands. You know, Mackenzie Fund, one of the premier resource fund in Canada that invests only in good company and good management and good stories. They own 9%. Eric Sprott, who used to be 7.5, now he's 11%. David Arkwell, chairman of Franco-Nevada, SSI in Liechtenstein, who's still a shareholder after many years. Ingalls Snyder in the US Global. Myself, I own more than 3% of the company. We've been supporting a very good project in a very tough time. And I think we will be reaping the benefits a lot more than people because we stick to our plan. We invested at 5 cents 3 times in those private placements. And the last deal was 10 cents. But look, by the time the deal was announced, the stock was 12, 14, 15, all the way to 23 cents. This is an endorsement of what we're doing. This is the beginning.
And we can talk about it being the beginning and what you're going to do with all that money. Maybe that's also fitting. And that's also your latest news release. $7 million you raised. What are you going to do with all that money?
I think we will. We said the use of proceeds was drilling. We're planning to have up to 4 rigs turning in January, 2 in the North Belt and 2 in the coal mine. We have a lot of drilling to be done near surface. Of course, the story became a little bit more difficult when we had the deep drilling. If you remember, the last time we spoke, probably people were disappointed. We didn't hit the Campbell shear economically, but we hit the Campbell shear. People don't realize the impact of that deep drilling. It's amazing. It's like,
Well,
yes,
hang on.
it's the
What is? I'm sorry for interrupting, but what is the difference between you didn't hit it economically, but this is why we're in this game, right? To make money. So you hit it But it didn't hit it economically. Why does that
Geology,
matter?
geology and ore are two different things. Okay. Or mineralization, gold mineralization and geology are two different things. Gold mineralization in the Campbell Shear is hosted by a shear loaded with quartz vein. When you hit the Campbell Shear at surface or at depth, and there's no quartz vein, there's no gold. The Campbell Shear is still there. So you're looking at a model that is extremely well known because 14 million ounces of gold has been mined through that Campbell Shear, right? So there's a lot of information to understand what it takes to find the gold. So in my original deal with Newmont 4 years ago that I signed in 2021, I was requested to find 1.5 million ounces. And this has changed because gold is not $1,700 an ounce anymore. It's 4,200. So the economic of that project changed completely. I don't need 1.5 million ounces to go back in production. 1 million ounces is enough, right? Because think about it, 1.5 million ounces at $1,700 an ounce, $200 an ounce profit gives you $300 million benefits. So look at it from a million ounces perspective. If your cost is 1,500 or 2,000 and your margin is $2,000 an ounce times a million ounces, that's 2 billion.
Yeah.
So we're in a different time zone completely.
It does the valuation you have right now still warrant a $1 million operation though? Do you think the market might be expecting more than just 1 million ounces in production?
No, I think you have to be this operation will be 140,000 ounces a year, with some sort of satellite deposit to the north. And in the Con mine, the advantage of the Con mine, the reason I was stubborn about making this deal happen, it's very similar to the Detour Lake asset that I purchased in 2007. So I did an IPO, I purchased the Detour Lake asset, and then I went straight to Goldcorp Canada and then renegotiated the deal to get the mining lease in the name of Detour Gold sooner than later. Because the mining lease and surface rights is like not a shortcut, but it's a more straightforward. You're taking a brownfield project, which already has been disturbed, which has a lot of baseline studies. You're not disturbing new lands. You're staying with the same footprint. Actually, Detour was a bigger footprint because it was an open pit versus an underground mine. But the permitting process that I did back then was less than a year. So when you go and find something in Canada, anywhere else in Canada, the permitting process could be 5 to 15 years. The Con mine is very cornerstone to bring back this project back in production within the next 5 years. And it's on our timeline in the presentation. If everything goes according to plan, we could be in production 5 years from now.
Permitting and everything, or
Yeah, correct.
is that just theoretic? Or because I mean,
Because it's
permitting
theoretical.
timelines in
It's
Canada,
always theoretical. If gold goes down to $500 an ounce, nobody's going to be mining,
right? Yeah,
right? So you can have all the theoretical aspect of it, but at the end of the day, if you have a plan, and this is the plan, we drill this winter, we have an MRE in 2026, Q3. We follow that with the PEA, which we're already working on. And then we could be in a feasibility study stage in 2027 with permitting process. And we could be basically in a situation of production decision by the end of 2027, waiting for the permit to build. The surface lease of the Con mine is your shortcut to go back into production because you're not disturbing any new land. You're staying within the same footprint of the mining lease.
yeah. I think we'll be back actually to this when we do an update. I have a question about that later on. I'll be back to it for sure. I was just thinking though about that financing that I just asked you about. Just before I forget, last time we spoke, well, one of the times we last spoke, you told me that you didn't want to use flow through. What changed? Why use flow through for this one?
It's charitable flow through. It's different.
Right. So
Charitable
you're
flow through. So there's two things. The flow through is flow through. Okay, it's run by account that buy it for a tax purpose.
right.
CFT, charitable flow through, okay, is an investor that is the back end of the guy who gets to deal with the tax.
Mm-hmm.
I get 40% premium.
Yep.
So the 40% premium I get is the tax relief the guy got, and he sells a share back right away to 10 cents, at 10 cents, to Eric Sprott, to McKinsey Fund, and to David Arkwell. So like this, I put 35 million share of the 55 million share deal in charitable flow through.
Mm-hmm.
I did a small portion of flow through because it was all insider and shareholders. So that portion at 12 cents is including myself and some other shareholders are taking advantage of the benefit of the tax, but we're shareholders. We're not sellers.
Mm-hmm.
The traditional flow through in Canada, and I got slammed so many times by so many people in this industry, and I built Detour without doing any flow through. I know the gig. They buy it for a tax purpose, not for your project. They don't care about your project. That's flow through. And they tell you, I'm going to hold your stock for between 4 to 6 months.
Yeah.
They're very upfront. I have no intention of keeping it. It's very, very, it's a great way to raise money for some people that cannot raise money. You know, on top of that, sometimes they have to issue warrants. I don't even do warrants, as you know.
Yeah.
Why? Because warrants is another level of downplaying your stock.
Yeah,
It's
I agree.
another avenue for that.
Yeah.
I've learned that a long time ago. I mean, look, my background is no warrants, no flow through. And all of the charitable flow through, 35 million share, was placed with Eric Sprott, David Arkwell, and McKinsey Fund. They're not sellers.
Yeah.
So
That's exactly where I was going with this. The hold on this financing runs out on March 29 next year. So right at the end of Q3, that is. Are you hoping you're going to have some announcements to the market in order to manage any potential liquidity there? And I understand you're saying that there's not going to be much
I am
liquidity.
not even worried about that because 90% of the deal was put in shareholders' hands that are there for the long term. So there's going to be a very, very, very limited. And quite often, we're very close to anybody who has. They know they can call me and I'll place the stock. They're not going to dump me. So
Yeah.
there was a bit of pressure last week, on the overall market.
Yeah.
Quickly check. None of my shareholders are selling. They would have all the same reason. Listen, the stock is 20 cents and they bought it at 10 cents. No. No, we have a very good project that has a long runway to go.
Yeah.
This is not just the maximum we were going to get. Think about it. We have 1.2 million ounces in resource north of town. We have 500,000 ounces that could easily become over 1 million ounces within the next 12 months. What is the value of 1 million ounces alone in this world with a mining lease and a surface rights being in town and with almost like 90% of the permitting through? What is the value of 1 million ounces? Just 1 million ounces. Is it 200 or 500? Is it 100 or is it $50?
There's a lot of nuances that go into that. And I was writing some things down that we should touch upon as well within that regard, specifically margin and everything else that comes in too. Are you going to have news though before the end of Q1 next year?
Of course. Of course. I'm going to have news of drilling because we're starting to drill in January. So we're going to have 4 rigs turning. So we're going to have result probably starting in February all the way to the month of June, July. And not only that, I'm keeping enough money to drill through the summer on a target that can be drilled in the summer.
Yeah.
So we're going to have continue drilling all the way to September. Plus, we're going to have an MRE coming out in September, October, and then a PEA at the end of the year.
Yeah. So
So
the
I
end of the
think,
year. So you think it's going to be Q4 that you're going to have that PEA out?
yeah, I don't think we're working on it now because we have enough information to start working on it. And we're bringing a lot more, that 109,000 ounces of indicated is one of the target that I'm trying to get to 300,000 ounces, say, for example, with more drilling in a specific spot. That is where we're going to be starting mining, for example. And it's right at surface. It's between surface and 300 meters vertical. So it's not very deep.
Yeah. I have that on my list too, so we'll get to it as well. Do you think you might have to finance though between now and having that PEA, or are you going to have to finance again?
I don't think we need to think about financing until the MRE is out. Okay.
Okay.
But it doesn't mean I'm not working on some other things, which could
What does that
lead
mean?
into. Oh, look, I'm always looking to create shareholder value. Okay. So if I have an opportunity that I think can be materialized in 2026, I'm going to get it done. And if I do get it done, uh, it may change the company profile drastically.
Hmm. Yeah, that's an interesting point. I don't suppose you can tell me more about that though.
Well, think about it. Drilling will do one thing, will bring result, will bring confidence into the deposit. It's all very good. We're going to be drilling in the north also, which we're going to be putting things work together. We're following up on a 33 gram over 3 meters. So we're drilling right on a discovery hole that we did in 2022, hole 14 in the Walsh Lake area or Mispickle the zone that we discovered. It's a new zone, zone 14. But on the big pictures, all that drilling is being done. It's all set. Do you think I'm just going to go like this for the next 6 months? Look at the financing I did in at the end of November. Look at the interest. Eric could have stayed at 8%. Why did he go to 11?
Hmm.
Look at the newcomer, David Ockwell, $2 million. Mackenzie Fund took 15 minutes for them to write the check for $500,000. So I got, it looks like 4.5, and in reality, it's 4.5 times 40%, right? This 45 million share is roughly 90% of the deal, right? Or 85% of the deal.
Yeah. Yeah.
So very quickly, with 3 investors, I was able to raise very good money because at the end of the day, uh, the moment we realize the purchase of the coal mine and we materialize it, it will change the company completely because we will own 100% of the coal mine. A lot of people are not giving us any credit for the ounces we found on the coal mine because we don't own it.
Yeah.
So any ounces we have north of town, once we acquire the coal mine, becomes a lot more valuable.
Well, I actually want to follow up on the MRE first, maybe that you'll be working on before that, because you said you're not going to have to finance before the MRE, but
Well,
potentially
I mean,
between
you're
MRE.
talking about when do I need money again?
Yeah. Yeah.
When would you raise money? Well, maybe at the back of the MRE because I'm showing 1 million ounces.
Is that your target? Is that how big you think it could get, or what are you targeting there really?
It depends. I think the sky is the limit on the coal mine. We work a lot on a zone that was previously drilled underground. Okay, underground drilling on the coal mine. It's called Sector 103. Or it's the northern extension of the Campbell Shear. Uh, and you can see it on the presentation. Northern extension, and we say more than 500,000 ounces. It's not public. It's a number that we calculated internally, uh, but it's there. It was never mine, and it's open at depth.
Mhm.
So this area will be drilled next summer, but we may not put it into the 42-101. We may have time. We may not have time. We don't really care about it because we know it's there. It's also drilled underground. So it's been very, very drilled tightly. But the potential is there into the ore shoots to add a lot more. You could have 1 million ounces potential right there, just on that sector alone. Remember, the coal mine was shut down in 2003 when gold was $340 an ounce. What was the cutoff grade back then? You know, the minimum cutoff grade to make money or the break even, 10 gram per ton. Okay?
Good times.
So there are people out there doing a resource calculation for their project using 1.5 and 2 grams cutoff grade on the ground. So,
Yeah.
so listen, this is an amazing project. It's a high grade project. Are we going to do 10 to 15 gram? Probably not, because maybe 5 to 8 gram is enough. But I can tell you, just changing the cutoff grade, for example, in our resource that we have in 2022, September 2022, we use a 3.5 gram cutoff grade for underground mining. Change the cutoff grade to 2.5 and you get 700,000 ounces. Just change the cutoff grade. So I don't even have to spend $5 for that. And I find you 200,000 ounces. So
I'd buy 200,000 ounces for $5 if you're selling. Um, what do you think is the PEA?
I still have all the gold from the first bar at Detour.
You still have it? That's pretty cool. What is that? Like four kilos?
5.
5? Impressive. You shouldn't be saying that. But
Well,
what are you targeting for PEA
gonna
though?
say
Conversion
somewhere.
between MRE and PEA. How big is this PEA going to get?
The PA is not going to be, listen, I have the cash flow already done because I did it myself. Well, how do you look? I work in corporate development for many years and we evaluate project. I've been evaluating project for more than 30 years. We use cash flow all the time. What does it look like at $300 gold, at $500 gold, at $1,000 gold? Our project is a safe project with gold all the way down to 15, 1600, or even you can say 2000. It still make money at $2,000 an ounce. So you can imagine that the PA will have a very good return. And the cost of putting the mine in production, we save $200 million in site preparation. If you think about building a project somewhere in the boonies, or even like 20 kilometers out of town, you need to drive, you need to build a road. How much is a road? $2 million a kilometers? I can tell you how much was the power line we built at Detour. It was 120 kilometers long. It was $1 million a kilometers. There's a cost to everything. So when you have a combine site with a warehouse, with a water treatment plant, with all the roads and all the ditches already built, and you have nothing else to do except redesigning a tailing facility and putting a mill, it's much simpler than starting again fresh in a green environment where you have no idea what it looks like. So there's no question in my mind that this project has a lot of benefit, a lot of positive. It's more costly to operate in Yellowknife compared to, say, southern Alberta. There's no question. But we still have 23,000 people. A lot of the diamond mines are closing in the Northwest Territory. So there's a lot of quality mining, underground miners coming out of those mines that will be looking for work. There's no question that this project also has all the support of the town of Yellowknife.
I actually saw that with some of the diamond mines up there now closing. Could the government and the First Nations start moving a little bit faster as well? Because I saw a piece of news about that not too long ago.
There's no question there's a sense of urgency in the town because some of those mines are shutting down next year. So they don't have anything being built or being a target for a new operation in the area, except maybe lift with the critical minerals
Mm.
and our project, which is right in town. There's no other project.
Mm. Well, you say that there's no question in your mind that the local folks wanted. Is that the sentiment on the ground when you go and talk to them? Because I believe the way things were left in the Yukon, in the excuse me, in the Yellowknife region, wasn't all that, yeah, it wasn't all that great. With the previous operator. So what's the sentiment there now?
Depends which operator you're talking about.
Hmm. Well, what is the sentiment toward you?
This is a very good question, but Yellowknife is based on two stories, a bad one and a good one.
Mm-hmm.
So which side of the fence are you sitting?
Well, I think a bad story leaves more bad taste or more taste in
There's
people's.
no question that I had to fight that. The giant mine is a very sad story
Mm-hmm.
because it was run poorly by poor management that did not make the right decision in a very low gold price environment. And it was left as a bankruptcy that Canadian government end up having to shut down. But you know that bankruptcy is 27 years old, and the government hasn't done anything on the closing. They're just starting, so it leaves a bad taste in the mouth of a lot of people because it was badly operated, went bankrupt, and the government has done nothing over the last 25 years.
Mm-hmm.
And what do you need in a town like that has only seen a negative aspect of mining when you want to build a project and build it right because you want to change that philosophy of being negative? So, of course, depending who you talk to, people are not very happy about that.
Right. Yeah.
You know, it's a very interesting thing. I was, we can talk a lot about this because I heard a lot of people talking from different angle on this. We are responsible to do proper mining and protect the environment and the people's life. And that should be your first, most important social license to operate.
Well, we could talk a lot about that. I have a follow up, but if I ask it, we'll probably get into just an hour only on this topic. I want to go back to talking about the PEA and all that. The PEA and the MRE are going to be a significant change for the company. Do you think you might do a rollback before or after the PEA, or one to go with the
I
PEA?
No, no. I think we can create the value we need to create at point in time. I mean, the catalyst of a rollback is maybe when we have a production decision and we want to build a mine and it costs $300 million US, right?
Yeah.
Maybe that's the moment you do a rollback. I don't know. I mean, but until you write a big check, why do you need? Look, I mean, I look at different story. You can still lift it even if you have for 400 million share. I mean, I don't like the share count. I built Detour from 40 million share to 105 with $2.6 billion raise. Okay.
Yeah.
I had a very good structure. I had the best structure to work with through my career, right? This is an achievement on its own, right? To do this for the detour story. But this one is different. I had to live through a very tough time over from 2021 to 2025. And we kept working, we never stopped drilling. We moved the project forward every year. And now we're in a position where we can do the right thing.
Yeah. Yeah. That's fair. How much conversion would you be targeting though? Or do you think some of the new zones you're working on will also end up in the PEA? What does that look like?
What do you mean by
Conversion? Yeah. How much
conversion?
of the How much of the resource that you're going to have at MRE do you think is going to make it to PEA, or do you think you might add some of the new zones on top of that? Because typically a PEA would be a smaller resource that's actually economical, or would you be adding more to it?
I think that the PA would have a portion of indicated, you know, and of course you're not going to have necessarily measure because you're not going underground, right? So, but maybe we'll be going underground sooner than later because we don't need. Our project basically is not touching the old mine at first. The first 5 years is we drive a ramp and we're not dewatering the mine. We will dewater the mine, but not to go into production. We will do probably the dewatering of the mine as we use our cash flow to do that. But at the end of the day, we know about what needs to be done, and I think you can start the project with 700,000 ounces near surface, and that's what we're aiming for.
I'm also thinking about some of the other zones, though. Like a couple of months ago in September, I believe you talked about evaluating the 2002 historic resource of 650,000 ounces at up to 12 grams between surface and the Robertson shaft. What's going on there, and what other work are you doing to bring that up to date?
We went for the big part. So part of that 103 zone, which is the northern extension, is part of that resource block of 650,000 ounces. So how much of it is in the 650? I don't know because I need a detailed table. Calling it 103, this is what we think it is there. But remember, it's 10-gram cutoff grade. So using a different cutoff grade on the 103 zone, we were able to get it all the way up to 500,000 ounces with the current drilling. And it's drilled tight, right? It's drilled every 10 meters. So it's a very, very tight, narrow. We believe that this area could yield a lot more ounces because it's open in many directions. But always remember that when you put a resource and a reserve at the end of 2003 that calculates 650,000 ounces at 11 to 12 grams, there's ounces that you may never touch. So you try to go, where can I find enough to make it developing, a good, because you're not going to go at the end of the drift where there's 5,000 ounces left. You need an area which has enough ounces to go and develop.
Yeah.
Yeah.
Well, you mentioned you'll be revisiting those ounces at a different cutoff grade than they did historically. Obviously, what is the cutoff grade you're thinking?
I kind of adhere to it when we spoke a little bit more about the previous MRE, for example. In the upper area of Yellowknife area, we have about 500,000 ounces together, indicated and inferred, using a 3.5-gram cutoff grade. We believe that somewhere between 2 and 2.5-gram cutoff grade is a goal for underground mining. But as you go deeper, that cutoff grade change, right? It could become like 3 and then 3.4 and 4. And below the mine, it might be 5, just to give you an example. So you have to be careful about cutoff grade where you're talking about.
Mm-hmm. Yeah. Well, that's actually interesting. And I suppose that will change over time as well between MRE and PEA and so on, or would you set it? Will it work?
The MRE gives you indicated and inferred, okay, depending on your drill spacing and the confidence that you have into the continuity of the zone.
Yeah.
We already are shaping some of the stope.
That's actually a good point as well. What's the minimal mining width that you would go for here, and does that influence the cutoff?
3 to 4 meters.
So is that going to influence your cutoff?
When you do a cutoff grade, okay, it's like doing, I want to have at least 3 grams, just to keep it simple, 3 grams over 3 meters, which become 9 GT, okay?
Yeah.
So you're not going to mine less than 3 meters 3.2, 4 meters. You want to limit dilution. And your mining method actually will have an effect on your cutoff grade and your width. Because if you do long hole and you retrieve everything, it's like you cannot, in that deposit, you cannot go 100 meters. So you need to have different level. So when you mine a project that has, and even the angle, for example, if the angle is like vertical, everything is going to fall down, right?
Yeah. Yeah.
But if you're at 45, it's much more difficult for the ore to come down. So sometimes you have to rake it down because some of it stays there. And when you're at 45, you have to be careful about the hanging wall. Is the hanging wall is going to stay there or is going to fall and then dilute? There's all kind of thing. I mean, you don't have not one gold deposit can be mined the same way as others.
Yeah. Yeah, that's
There's
true.
many different mining methods, and they influence your cutoff grade and your mining method and your cost of development.
Yeah. And
That's what we're doing now. That's what comes in the PEA. What will be your cost of mining per mining method, depending what you're doing? And you may have 2 or 3 mining methods.
mhm. It also depends on the gold price, and so does the cutoff. And that actually reminds me that
It's outside of the cutoff grade. This is about what it costs.
yeah.
It has nothing to do with the gold price. The gold price basically just help you. And if a cutoff grade is about uh, how much does it cost to mine?
Mhm. Well,
The cutoff grade was 10 gram when gold was 340 because it cost $100 a ton to mine.
yeah.
Correct.
Does the
It
the
doesn't
gold
make
price going
sense.
higher, does that increase the strike length? Like, is there a part of the deposit that is higher
No,
cost and more difficult to mine and process that does work at
the
higher gold prices?
higher gold price will definitely help us uh, to lower down the cutoff grade and help us get more ounces.
Hmm.
It could also increase the strike length of a lens by, say, from 200 meters to 250 because you're using a lower cutoff grade. So you may be able to do more tons. And
Yep.
and the strike length, but like I said before, the Campbell shear is a very different deposit than others. It's a shear zone, and the core of the quartz vein that shoots down vertically, you have an amazing continuity. On the strike length, it's 100 to 250 meters strike length. For example, and I have a slide in the presentation that we use to show in the appendices, uh, which shows basically an area which was 100 meters long, which grade an ounce per ton, 30 gram plus, because it was all full of quartz. And next to it, it's like our deep hole at 650 meters intersected an area of the shear zone where there was no alteration and no quartz vein. And we hit fuck all. So,
Yeah. It changes with the different areas as well. That's an interesting part. You'd
well,
also
look, the deposit is refractory at surface
yeah.
and free milling. The good thing also about Zone 103, they have some metallurgical test work and it was free milling.
Mhm.
So, and you're in the same shear zone, except one area is refractory, the other is free milling.
Yeah. How is that? Because you had also plan to test 3 areas between 800 meters and 1400 meters vertical in the main ore body that were not mined historically.
No,
What exactly are you looking to
that's Zone
test there?
103. That's what we call the Block 103 from the
Yeah.
previous report, which is the northern extension of the Campbell Shear.
Why
That
were
was
they not mined historically, by the way?
they drift through. There's a drift that goes all the way to the end of the zone,
Mhm.
almost like I would say 1.5 kilometers drift, level 3100, which is about say 900 meters below surface. And they did the drift so close to the zone that they were able to drill it a bit, but not properly. So they never drilled the extension at depth or up dip, unfortunately. But some of the work that they did there, the grade was maybe when we did our calculation, we end up with a grade of about 5, 6 grams, but using a cutoff grade of 2 grams. So I imagine that back in the 90s, when they were drilling this, by using a cutoff grade of 10 gram, it was not economic.
Yeah.
So that might be the link to your that area of the mine was not mined previously because the cutoff grade used back then was too high for what was there. But at the same time, I think they did a bad job of drilling it. So
Hmm. Is that going to be expensive drilling? Because again, we're talking about 800, 1,400 meters depth.
I'm not going to be re-drilling it. There's been so much drilling underground to prove the continuity of that zone that the next step, we may drill a few sections, maybe 3 sections, 2 hole each, which will be 1,000 meters hole, like you said, somewhere between 600 to 1,000 meters. I'm not going to go underneath. The best way is to go back on the ground eventually, have a drift, and drill properly.
Yeah.
So this is like 10 years on the road.
Mm-hmm. Yeah. You've also
Or
talked about,
5, 6, 7 years down the road.
but there's other stuff that's more shallow because you've also talked about adding ounces between surface and 700 meters in the
That's Yellowknife. That's the
Yellowknife.
southern
That's it
part,
in that
southern
trend.
extension. Yeah.
Yeah. So
This is where the drilling is happening this winter.
oh, okay. Yeah.
Yeah. Drilling is all happening this winter. If you look at the long section and you're looking west, this is all the upper part. That's where the drilling is happening.
Mm-hmm.
It's written drilling Q1 2026.
Is that going to include is that including the con mine or
Yes, it is.
yeah, and the North Belt resources in there as well?
That's
Or
different. 20 kilometers north of town.
okay, okay, that you're not going to drill that.
Yes. Yes, we are drilling that too.
Oh, okay.
Yeah.
What are the costs there? What's the all-in cost there?
For what? For drilling?
Yeah, between the two. I mean, the Yellow Rex and
meters. Now that we have signed the contract with the drill company, I know more about the pricing. We should be able to drill around $250 Canadian per meter all in.
okay, that's good. Assays and everything. I mean, that far up north, I would have thought it was more. And I'm really asking because again, you had drilled down to 2.6 kilometers deep previously and pivoted because of the cost of the drilling. So yeah.
I had to do this, Antonio, for a good reason. I was able to prove the Campbell shear technically is present there, but it's impossible to do that program from surface. It will cost $30 million and take 3 years. It's not a good, and we're not going to be going there after those zones for mining over the next 20 years. So what's the point?
Yeah. Yeah.
So our focus went back to surface. But I needed to prove the point that the Campbell shear is still there, 600, 700 meters below the mine. So that part is done, and we turned the page, and it's there.
Yeah. So you don't think you would go back to deep drilling at all in your time then?
Not for the next 5 to 10 years.
Yeah.
We don't need to. Not with that gold price.
Drilling efficiency probably different as well, right? Because I remember it going like very slowly at a certain point. The deeper you went, how's that going to be different?
Yeah, and on top of that, it was a tough market, and we were doing tough drilling. So
yeah,
countless sleepless night.
I can only imagine. You might laugh about it now, but I can only imagine that was actually the case. What's the assay lab turnaround on that drilling? I suppose you're sending it to Vancouver. How quickly do you think you're gonna have some assays?
Usually the turnaround is roughly 3 weeks.
Oh, that's good. Yeah. That's because no one's drilling during the winter, or not a lot of people.
There's less people. Most of the people in the northern Yukon and BC are not necessarily drilling in the mountains. So some project, of course, get the drilling done in the winter, but maybe the competition is less. I don't know. I mean, some people like For example, the AMARC, TDG, to the Gold Discovery.
Yeah.
I don't think they're drilling in the winter. I'm not sure. Maybe they are, but I
Hmm.
thought they were done for the winter.
Yeah.
It depends. If you can drill, you drill. If you cannot, you don't, right? So
Are you gonna have to make some option payments between now and then, though? Because I believe the option runs until what, November 2027, since you renegotiated it, so less than 2 years now.
no option payment.
Nothing. Okay. Yeah.
No. Unless we purchase the mine, then there's a cash payment of 8 million.
Yeah. But that's not for now, though. I assume. I mean, you would want to see a PEA first before you even start thinking about that, right?
Nope.
Oh,
I'll
okay.
do it when I think it's the right time.
What does the acid look like when it is the right time?
Well, it's maybe this is what I'm working on.
Okay. Yeah. I like that. You're not telling me everything because you probably couldn't, and so I like those conversations. I'll leave it at
You
that.
always need to be able to move your project forward if you can't. If you believe that you have a project, you shouldn't wait to make it happen.
Hmm. Yeah.
And for me, it's like compared to a lot of juniors, most of the juniors they just want to have a discovery and sell it. For
Yeah.
me, I can take it all the way to the finish line. So,
Hmm.
and we're playing a very big role in sustaining the economy in a depressed environment.
Right.
And bringing a good news like the Con mine, and I probably would change the name of the mine. I would like to probably, I don't know, think about a more positive name for the rebirth of the area.
How did that
But
name even come to be? I mean, it is pretty funny. I've talked to you about that before as well. But why is it called a con?
uh, Caminco is the company who put it in production, I think. So
Hmm.
no, I know what. The Con mine comes from from the shear zone that was called the Con shear that was discovered in the 30s. So the name of the mine came from that shear zone that was named Con shear. So that's how far I can go in terms of finding out what is it, what it is.
Yeah. Yeah. Gerald, what keeps Newmont interested in the current structure, though? And they've also revised again the contract once already. But so did he
They didn't change
get?
the structure. They just gave me 2 more years.
Yeah, yeah. Well, yeah, the contract structure. But what did they get, like, back in rights or veto points or anything that could come out as a surprise later on? Because I'm just trying to
No, I
understand.
think it's too small. They have a back and right. That back and right never went away. Uh, but you have to leave it to me. The deal is the deal we signed in 2021, and you can revert back to the summary. We even have it on our presentation, the summary page, what it entails to materialize the acquisition. But you have to realize that the deal was signed when gold was 1,700. So there's a lot of interest to materialize that acquisition sooner than later with that kind of gold price environment.
Hmm.
So
Yeah. Well, that's
look, in
exactly.
2025, look at one of the achievements. The OR Royalty had an option to have an NSR on our property. Didn't need to up to exercise it, but as a veto of support, as a veto endorsement of the work Gold Terra is doing, OR Royalty wrote us a check for $2 million last spring.
Yeah.
So there's a lot of good thing that has happened in 2025, but it didn't happen overnight. These
Hmm.
things like that exercise took me 12 months of work.
Right.
The deal with Newmont that I signed in 2021 was 18 months of work. Sometimes it takes time. But we do have a clear path. We have some very good objective for 2026, and I think if people were listening to this podcast uh, and they're shareholders, they'll be happy that we're working extremely hard to create shareholder value.
Hmm.
And we are very, very undervalued, even if we are 20-cent stock.
Yeah, and that kept me thinking about what keeps what keeps Newmont interested if they don't get like backhand rights and all these things? Because it doesn't look like it's Newmont scale, just like you said.
If we don't, first of all, it's too small for them. Okay.
Yeah.
They produce 6 million ounces.
Hmm.
They have zero interest of putting money in Canada or in the Northwest Territory. They just sold all of their asset in Canada, one after the other one. Musselwhite, Timmins Camp, or the Destor Porcupine Camp. They sold Eleanor as well. They just sold coffee. I mean, I wouldn't be surprised that they are selling more than that. They produce 6 million ounces a year. They need to find deposit that can produce 300 to 500,000 ounces a year. That's what they need to do. That's not going to make the cut to produce
Yeah.
100,000 ounces.
I I agree, and that's why I'm wondering why stay why are they staying? Why are they involved in the story even now? Like, yeah.
Because they don't want anybody to screw up and end up with a mess. It's very simple. Look, I work at Barrick for 12 years, and we have some amazing story to tell. But at the end of the day, when you decide that a mine that is closed has nothing else, you just walk away. You close it, and you do your reclamation, and that's it. That's all.
Hmm. Yeah.
You know, look at my detour story. Placer shut down the mine in 1998 when gold was $256 an ounce, and they could not make any money at Detour underground, and they shut down the mine. Somebody bought it for the exploration right, did some work, gave up, and I bought it in 2006 for $75 million dollars with the IPO January '07. And 6 years later, there was 30 million ounces in resource, 16 in reserve. And there was a mine producing 600,000 ounces a year for the next 30 years.
Hmm. Yeah.
So people have very short view about things. Newmont will never put a penny into since when they bought the Con mine through the Miramar acquisition in 2008 for the Haute Bebel project, which turned out to be a mess for Newmont, where they sank $1.5 billion, and they give it away to a company who went bankrupt, which was purchased by Agnico Eagle. You have to look at the broader perspective when you look at decision making in a big company. But at the end of the day, Newmont can be responsible for the coal mine for the next 50 years for life, for at $2 million a year for monitoring the mine site, or find a buyer who can put it in production like we can. So this is your two options. You
Mhm.
keep it or you sell it.
Yeah. Yeah. That is fair. I don't want to waste too much of your time today, so I'll keep it moving here, Gerald.
Are
But
you falling asleep?
never, definitely not
I'm
when
still on
talking
the
to you.
European
You,
time too, eh?
what's that?
I'm still on the European time.
That's good. Then yeah, I understand how you might need a break. No, I'm joking, but
No, it's okay.
you're
I've been sleeping very well. When you travel west, you always sleep so much better. So
that's absolutely true. And I've done maybe too much of that this year, but it's you're right. Actually, coming back home is tougher. How is your GNA? It seems to have gone up a little bit relative to last year. Do you think it's gonna go up even
what do you
more
mean by
this?
that?
Yeah. What's that?
GNE? Really? My GNE went up?
Yeah. Yeah.
I don't think so. We're a
Um,
$1 million company. We burn about 100,000, and the rest is all drilling.
do you think it's going to go up more this year? Do you have to spend more money on it now than you did last year, or how do you see that?
I don't know about that. It's always very difficult to be able um, to assess that properly. It's not easy, right? It's the company is very, very small, very simple. We spend $120,000 on filing, admin, and payable via Pacific Opportunity and Mark Brown. You have my salary who hasn't changed in 4 years. You know, I don't have any stock option. No, I don't think the G&E is a big thing because we don't have any office. We have a very low administration curve. I mean, yes, uh, but you have a CEO and a chairman who can build mine. So you want to give him like $50,000 a year, or you want to keep me, right? So,
I thought
and
you were
that's
doing
what
it for the love of the game, though, not for the salary.
to be honest with you, I do it for myself and for the shareholder because when I say people that I believe in this project, I will get it there.
Hmm.
I might be changing. There's one thing at a time. The moment we materialize a common acquisition, our G&E is going to go up. Until then, it's not.
Right. That's fair. Do you want to do more marketing or anything like that? Less marketing? I don't know. What do you think about marketing?
We have slowed down this year. We decided not to go to any of those conferences that charge an arm and a leg, and it's always the same people looking for a free lunch and a very good bargain to invest, but they don't have much money. They're small investors, and is last year when I went to I think the last time we maybe having an interview was last year at Bali,
Hmm.
and then also I did the Zurich conference just before the European Gold Forum. Waste of money.
Mm,
Yeah, waste of my time and waste of money.
yeah. What do you think is the biggest
Look, I
risk?
just did. I just didn't do any conference over the last since PDAC. Okay, I do some very selective one. Uh, Mainly targeting investors and time, and it's been much better. But at the end of the day, I do my work in the background and get better shareholders.
Yeah. What do you think is when you
It's,
talk
it's
to
by
them?
the
What?
way, it's very hard, Antonio, to raise any money or any attention when you're a $20 million market cap.
Yeah. Yeah.
It's hard. Yeah. But now we're maybe in a different ball game, and maybe we're gonna have more eyes on us because of the profile of our investor and the delivery of. Think about it. If I'm in production 5 years from now,
Hmm. Yeah.
and if gold price stays at 4,000 or 3,000,
Hmm.
I've seen said 27,000.
Hmm.
I don't predict gold price.
Well, it's interesting that you mentioned raising capital. I was wondering what the biggest pushback has been when you go and talk to those people, or what do you think is the
For a
biggest?
long time, it was market cap and price.
Mhm.
If you buy a stock at 5 cents, it goes down to 4 cents, it's 20% drop. Think about it. I did three private placement at 5 cents
Mhm.
with no warrants. You think it was easy to sell? You think we didn't work hard on this? It's crazy. The amount of work that you have to do to raise a bit of money to keep drilling,
Yeah.
no, can be tough.
Yeah.
Uh, my detour story is unbelievable. I never had to worry about money over a period of 8 years. It was
That must be
unbelievable.
nice.
Yeah, yeah, yeah.
Yeah,
I
and you
don't
and I have
have to
talked
worry
about that
about
in previous
much.
conversations as well. Yeah, yeah. What do you think is the biggest risk from now on out, between now and completing the MRE and then completing the PA? What keeps you up at night now if it's not money?
Mm, Not much. I think we have a very good program coming up. Four rigs turning 15,000 meters before the end of April. Because of the ice, we use a lot the ice for accessing the drill sites. Lots of result coming up all the way through September. Uh, we have a target actually that was never drilled and is a discovery made in 1938, and there's not one drill hole on it.
Hmm.
So we're going to be drill testing it towards the end of the program when we come out. But there's a lot of potential. Yellowknife could be a 5 to 10 million ounces story with time and money.
Well, with time and
Actually,
money.
an analyst that came to site 4 years ago told me when I said I saw five, he said, "With you, I see 10." But I'm saying 5 to 10. It's definitely achievable.
Yeah. With time and money, those are big asterisks there. But I mean, I understand
But
that
but
it's
but the time is the time. It requires time. The money is the problem.
yeah.
Give me a better money supply, we'll be drilling a lot more.
Mm, yeah.
Look, I raise a bit more money. This is the first financing I do above 5 million in a long time. I used to raise like 100 or 200 million dollars at a time, not five or two. This is the same amount of work.
Hmm.
So yeah, no, I think uh, it's all about patience. If you believe in your project and you have a very good project, you can yield a lot of good result. You keep going.
Mm, yeah. Yeah. Let's wrap it up, Gerald, and then you can go and rest off your jet lag
Yeah.
there. But what do you think I'm forgetting to ask you? What did you come here hoping to talk about that I failed to bring up?
I think we're just to conclude. I think Gold Terra is in a much better position than it was. Finally, I think the market is also realizing all the work we've been doing to bring the project forward. We have an amazing potential to be at a 1 to 2 million ounces MRE sooner because the 1.2 million ounces has a lot more value the moment you build a mill in town. There's no mill in town. So you can imagine that all of the work we've been doing for all those years, uh, if we cross the line on the con mine acquisition, we'll be a lot better company in a much better position to bring a mine forward in Yellowknife.
Hmm. Yeah. That's a good note to wrap it up on. I suppose we'll be talking sometime in Q1 of next year. But thank you so much for doing this. I really appreciate your time.
Yep.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they are necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should under no circumstances be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. So unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find the company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."